Hey there, it's Tom Ryan, founder and CEO of ICR. Before we get into the next episode, I wanted to ask that you subscribe to the show. It'll help us get even more unique and interesting guests on the podcast and in turn continue to educate management teams and the growing ecosystem that creates value for fast-growing private and public companies. And while you're at it, head over to Apple Podcasts and leave us a 5-star rating. Very much appreciated.
We think the real reason that DAT should exist is that they should, number one, give investors exposure to a specific token ecosystem. And two, they should provide additional yield on top of that to grow the treasury.
For those who might be newer to the space, digital asset treasuries, or DATs for short, can be a good way to start investing in crypto. With some of these treasuries, you might be better off just acquiring the tokens yourself. But today's company has an innovative model that aims to provide real value to investors over time.
An investor that buys the stock over time, they're going to end up holding more BNB tokens than they would if they just bought the BNB token themselves.
My name is Tom Ryan, and this is Welcome to the Arena, the ICR podcast. Each week, I sit down with today's business leaders to give you an inside scoop on some of America's most prosperous public companies, their origins, their challenges, and the keys to their success. My guest today is Patrick Horsman, who is the Chief Investment Officer of BNB Plus, a digital asset treasury company that trades under the symbol BNBX. The company unlocks institutional-grade access to the Binance ecosystem through non-directional yield strategies and long BNB exposure. Patrick has been the founder or co-founder of several hedge funds and businesses, operating in the world of decentralized finance, including Coral Capital, Esoteric Strategies, and Innovation Shares. He's also the founder of Verified Organics, an Ethereum-based blockchain application designed to bring transparency and accountability to the organic food production process from farm to table. It sounds like a lot, but I'm just scratching the surface. Let's enter the arena with Patrick Horsman. So I listed a few of your professional accomplishments. You've done a lot. Maybe tell us about some of the highlights that might help us understand your view to investing, and in particular, kind of how you went from traditional finance into crypto.
Sure. So I've been a hedge fund manager for 24 years. I started my career, I actually built a business out of college with a partner, raising capital for other people's hedge funds, and had the opportunity to learn from some of the best hedge fund managers in the industry, taking them around the world on road shows, meeting with a lot of institutional investors. Did that full time for almost 10 years. And what I really learned is that investors weren't necessarily looking for another macro fund or another credit fund or another long short equity fund.
Yeah.
They wanted something unique that didn't correlate to the rest of their portfolio because they already had the best managers in the core categories. So what I became interested in was finding those little niches where you actually had some kind of edge, even if it wasn't permanent, where you could build a strategy that could beat the market. And a bunch of smart guys sitting in a room trying to pick equities is difficult.
Yeah.
So an edge is super helpful.
Obviously, as an investor, crypto's so interesting, and there are a lot of people who are all in on it. There's a lot of smart people who are skeptics, which I always think creates opportunity. How did you kind of become aware of crypto? And in particular, how did the BNB Plus opportunity come to you?
I was familiar with Bitcoin as far back as like 2011, 2012. Remember a distinct conversation with a friend of mine. We were actually on the range hitting some golf balls in Scottsdale. And he's like, how much Bitcoin have you bought? And I'm like, I haven't bought any yet because I think I missed it. It's at $300. And I could have easily thrown $100,000 at it at the time.
Yeah.
It's funny, the same guy as a venture capitalist, he brought me Ripple as equity in 2015. They were raising money at $15 million
Oh my God.
pre-money valuation. So I was very early to some crypto investments. I was not disinterested, but I was kind of running a large hedge fund at the time, doing litigation finance, and just wasn't as focused on the industry. Really started to get more involved in 2017 with the launch of our ETF business. We were right at the time in terms of being interested in crypto. We launched the first equity-focused crypto ETF on the New York Stock Exchange, but it was actually investing in US equities that had crypto exposure kind of as part of their businesses. And some of my partners came out of Millennium, were running sophisticated quant market neutral strategies there, and we were using a lot of their kind of machine learning, natural language processing to build indices of these companies that were actually involved in the crypto space. We should have just launched a Bitcoin trust or a Bitcoin ETF and bought Bitcoin. That would have been a much better trade. And then through an agriculture business, I built a big private equity real estate fund called Integrated Ag, and we developed about 17,000 acres of farmland. we converted a bunch of that to organic farmland and learned a lot about the USDA organic program. And it's a great program. People like eating organic food, but there wasn't really anyone policing the industry. And organic food costs more to produce. You get less of it from a yield standpoint, which is why it sells for a premium. But no one was really policing whether that was the truth or not. The USDA standard gives you a standard, but they weren't actually checking if the food had pesticides, if the soil had pesticides. So we partnered with Joe Lubin at Consensus and helped build a platform basically where producers could track and trace everything they would do. And then prior to harvest and shipping to the supermarket, they would do independent lab testing to prove that the food didn't have any prohibited chemicals or pesticides, the soil didn't have anything. So it was a way to verify that they were actually meeting the standards. And we built that on the Ethereum blockchain in 2018.
And then how did the BNB Plus opportunity come to you? And tell us what the mission of the company is.
Sure. So I run a couple of crypto hedge funds. I started my first at the end of 18. And this was kind of the last big crypto cycle interaction with the public markets. We mentioned it briefly earlier with Grayscale and GBTC and ETHE.
Yep.
We saw that opportunity relatively early, started implementing it, raised a small fund, and did very well for our investors. I think we made 6-7x in an 18-month period.
Jeez.
Trade became crowded. We wound down the strategy, but I'd had some experience at the intersection of crypto and public markets before. After we wound down that strategy, we launched a DeFi fund in early 21 called Coral Capital. We ran that for 4 years. We ended up selling that business last year to a larger crypto conglomerate that wanted an asset management team. Myself and two of the partners, Josh Kruger and JR Pash, decided to move on. And we'd been talking to a bunch of the early digital asset treasury companies. DFDV was one of the first Solana ones. David Bailey from Bitcoin Magazine, the Bitcoin Conference, and he did Kindly, which is now NACA. So we were involved in the discussions around some of the earliest digital asset treasuries earlier this year and looking at, do we invest in them? Do we finance them? How do we get involved here? And we kept coming back to BNB as the asset that we thought really made sense, both from kind of a scarcity standpoint. Until April of this year, you couldn't buy BNB on Kraken. And I think until really a week or two ago, you couldn't buy BNB on Coinbase.
Yeah, I think it's just on Coinbase recently, which is unbelievable.
So this is the fourth or fifth largest token by market cap, 130 to 150 billion, depending on where the token's trading. And you couldn't buy it on the major US exchanges. So we thought that was interesting. There weren't any other competing DATs that had done BNB. And we really liked the ecosystem and the tokenomics and felt that it was a productive asset, which is very important to us. So what that means from a DeFi standpoint is that you can actually get yield from the token and from the ecosystem. And given our backgrounds doing this on a lot of different tokens, we were able to structure strategies where we weren't necessarily taking directional risk. So we weren't making a bet where we could lose money to generate that yield. We were able to just kind of implement strategies that allowed investors to capture additional upside from the ecosystem. And that could be used to purchase additional BNB tokens. And I'll probably go back to this a couple times in our conversation, but we think the real reason that DATs should exist is that they should, number one, give investors exposure to a specific token ecosystem. And two, they should provide additional yield on top of that to grow the treasury, where an investor that buys the stock over time, they're going to end up holding more BNB tokens than they would if they just bought the BNB token themselves.
I think that a lot of the listeners to this podcast are really new to crypto in general, let alone BNB. It'd be great if I just asked you a couple of rapid fire basic questions, starting with, what is DeFi?
Sure. So the acronym stands for decentralized finance. And the simplest way to think about it is it's financial applications that you would use normally that are built on top of blockchains and operate using smart contracts. So a good analogy is Coinbase. Coinbase is a centralized exchange. They have 4,700 employees. They're public in the US. That's a centralized business. The DeFi equivalent to that, say Hyperliquid or Uniswap, is a bunch of software that someone wrote. They might have 30 to 50 employees. And some of these decentralized exchanges are doing similar amounts of volume and trading and generating similar amounts of revenue, but on a per employee basis, generating dramatically more revenue than their centralized counterparts. Examples are trading venues, like I mentioned, lending venues. So if you hold crypto and say you hold Bitcoin or you hold Ethereum and you want to go buy a new house or you want to buy a car, it's not that easy typically to use the crypto, even like we all hope it would be, to buy that asset. But there's decentralized lending platforms that have popped up where you can deposit your Bitcoin, deposit your Ethereum, and you can borrow stable coins and then turn those stable coins back into US dollars to go buy whatever asset you want to buy. And that's really done now very securely and done very easily, where it's a couple clicks of your wallet approving the smart contract and they'll lend you the money. Another example is derivative exchanges, prediction markets. We've seen big growth there. So all of those types of platforms are essentially decentralized finance. Stablecoins is really the biggest one, and it's kind of the biggest adoption we've seen in crypto and the biggest growth. And those are decentralized finance platforms.
Yeah, and so BNB is the native utility token of the Binance exchange. And I think a lot of people don't know that's the largest cryptocurrency exchange in the world. It's not in the US. But what makes the Binance ecosystem so interesting to you and unique?
So Binance is the largest exchange globally. They do 40% of global trading volume every day. The next largest exchange, I think, does 9%. Coinbase does about 6%. So this is a business and an exchange that's 7 times larger than Coinbase.
Yeah.
And they also have extremely deep liquidity. And as traders and investors, you want to trade and invest with deep liquidity because that's how you get the best pricing and the best execution. So unfortunately, Binance currently doesn't allow US persons. We think that's something that's likely to change. We don't know exactly when, but we think the US is the last market that would have a dramatic amount of growth for them. They're pretty much in every other market globally. And the US regulators now, led by President Trump, and now the CFTC, are really opening up to allowing offshore exchanges to come into the US. The CFTC is passing some specific rules, I think, that are going to be done later in 26 that are going to allow that to happen. So can't tell you when, but we think that's a strong likelihood that US investors will be able to start using Binance again at some point.
And how is it all different from the other layer one blockchains like Ethereum, Solana? What are the specific kind of technical and economic advantages as you see it?
When BNB first launched in 2017, it actually was built on Ethereum, and then they transitioned a year or two later to their own blockchain. But the biggest analogies are speed and fees. I think Ethereum is 40 to 50 times as expensive to execute a transaction on in terms of gas fees.
Wow.
And it's also dramatically slower. So Bitcoin, sometimes it can take 10, 15 minutes to complete a transaction. In BNB land, you're doing it in less than a second. So having that instantaneous finality and very low cost to transact allows people to build these applications on top of the blockchain because it's cheap for people to operate and it's fast. And we're starting to see that some of the biggest companies are starting to do some tokenization on the BNB chain. Franklin Templeton announced that they're going to be tokenizing their mutual funds and ETF on BNB. BlackRock announced a couple of weeks ago that they're tokenizing their Buildle US Treasuries fund, and Binance announced they're actually going to take that as collateral in the tokenized version on the exchange. So independent of anyone else, some of these big companies are choosing the BNB chain because it's fast and cheap and reliable.
And BNB, when I started to learn about crypto 5 years ago, the thing that always stuck out with actually buying the assets itself was always kind of like, hey, Bitcoin has a finite supply, and that was a huge draw. But BNB also has a unique deflationary model. Maybe you can explain minting and burning and how there is a supply compression mechanism that protects people who own it.
Yeah, that was one of the things that attracted us. So unlike most other ecosystems, BNB is truly deflationary. A big chunk of the BNB is held by both Binance and by CZ, the founder, and they've committed not to spending it, but to only use it for either ecosystem development or burning it. And what burning it means is they actually permanently send the tokens to an address where they can't be retrieved, so no one can use them again. When BNB was created in 2017, there was 202 million tokens. And CZ committed to burning tokens every quarter using some of Binance's earnings. Initially, it was a percentage-based system. Now it's a little bit more arbitrary. But over the last kind of 12 months, they burned about $6 billion US dollars of BNB. So it's significant. And that happens about once a quarter. I think we're on the 37th burn now. And we burned close to $60 billion US dollars of BNB. And we're at about 137 million total tokens. So that looks like a 4 to 5% deflation per year. And it's kind of like buying back your stock.
Yeah.
It doesn't directly push the stock back up, but over time, your ownership claim of the network goes up because there's less tokens.
So I've heard Patrick say that BNB now is similar to where Bitcoin was in 2013. That's a huge statement given the run Bitcoin has had over the last few years, and I wondered what Patrick is seeing that makes him feel so confident that BNB will continue to appreciate in value.
So I think number one is Binance kind of getting through this whole thing with the DOJ, CZ getting his pardon from Trump.
Yep.
Likely entering the US markets, becoming kind of the global exchange, including the US, which is obviously a very important market for them to operate in. And then just continued improvement. They've done a really good job of continuing to develop the blockchain. They have some of the best engineers, making it faster, making it cheaper. In addition to those quarterly burns I mentioned, every time there's a new block minted, there's gas fees that are paid, and 10% of those gas fees get burned as well. We just think it's one of the best ecosystems. And because it's kind of self-reinforcing with the Binance exchange itself, they've created some real utility for BNB there, where as a trader, even a small trader, you get discounted trading fees for holding BNB. And some of the larger traders holding more BNB, they can get up to 25% trading fee discounts. Part of the yield strategy that we'll get into later is there's a platform on the Binance exchange called the Launch Pool. And if you have BNB sitting in your Binance account, you get access to Launch Pool. And every time a new token is launched on the Binance exchange, they take a listing fee from that project, say 2 to 5% of the tokens. They don't put that in their pocket. They actually airdrop that to the holders of BNB.
Wow.
So you're almost participating in the earnings of Binance, both through this listing fee, which they share with all the BNB holders, and through the burn of the token.
Yep. And then getting back to BNB Plus, in particular, kind of the yield generating strategies that you have at your fingertips versus kind of Solana or Ethereum, like what makes those yield strategies different?
So that was, as I mentioned, one of the biggest things that attracted us to the BNB ecosystem was because it's a productive asset. Given our backgrounds running DeFi hedge funds, we've been very active across different blockchain ecosystems, Ethereum, Solana, BNB, generating yield, doing yield farming, providing liquidity on projects, investing in projects from a venture capital standpoint. So we've kind of done it all across the different ecosystems. But BNB was attractive because of the multiple different yield opportunities, which I'll run through. There's kind of 4 core ones. The first is native staking. And that's something that's not unique to BNB land. It's common in Ethereum and some other blockchain ecosystems, Solana as well. I had a really smart guy named Matt Rozek, who's a very early crypto investor, been involved with us, tell me something that really stuck with me in terms of staking yields. And he said, look, the quality of the blockchain kind of dictates, like almost like a credit standpoint, how much staking yield is required to be paid. If you think about Bitcoin, there's no staking yields.
Oh, interesting.
So that's the highest quality ecosystem.
Yeah.
BNB, you earn about 1.8 to 2%. So that's kind of a pretty low yield requirement. Ethereum, I think, is just 2.5 to 3%. So that's kind of in the same range, a little more required yield. And then Solana is like 6 or 7%. So they're having to pay you more to kind of own their token and participate in the ecosystem.
So in other words, just by definition, you're having to take a little bit more risk and they're just like paying you more.
Yeah, it's like a corporate bond issuer.
Yeah.
Like the Microsoft bond is going to trade at less than some high yield bond.
That's a good way to explain it.
There's the base staking in BNB, and that's around 2%. So that's nice, but it's not super exciting. The next and the most important one for us is the Binance Launch Pool, and that's the airdrops that I mentioned. Every time a new token generation event or a new project lists on Binance, and globally, every project in the world wants to trade on Binance because, as I mentioned, it's 40% of global trading volume. Kind of just by being on Binance, you're going to get additional liquidity, additional owners of your token.
Yep.
Market makers trading it and making a market in. So everyone wants to be on Binance, and to get on Binance, you have to pay this listing fee. That gets airdropped to users. And the important thing for us is we don't have to actually pay money to buy those airdrop tokens. We're just given them for free.
Yeah.
And they're given to us as a proportion of our BNB holdings. So the more BNB we have, the more of the airdrop we get. And in this strategy, it's not our mandate to take risk on those tokens. So we're generally selling them as we receive them, turn them back into more BNB. The third strategy that we implement is a DeFi strategy, and that's a decentralized exchange on the BNB chain called PancakeSwap. And it's kind of a funny name, but it's one of the largest decentralized exchanges in the world.
Yeah.
As big or bigger than Uniswap, which was kind of the early leader. And there we are providing liquidity in one of their pools. And it's our mandate to maintain our long BNB exposure. So we can't just go trade random tokens.
Yep.
But most people in the Ethereum world are familiar with something called Lido. Lido is a native staking derivative token for Ethereum. You stake your Ethereum to Lido, and they run a validator and generate the yield for you, and they take some of it and they pay you the rest. And then when you want to get your Ethereum back, you sell your Lido token and you end up with more tokens than you originally started with. Listed DAO is a similar native staking derivative token in the BNB world, but it takes a little bit of time to get in out of it. It could be a week or so. So if token holders want their BNB back instantaneously, they can go to PancakeSwap, and there's a liquidity pool that swaps between BNB and Listed DAO. We can provide liquidity in that pool while maintaining our 1x long BNB exposure and earn swap fees. We think we can make 8 or 9% annualized in fees in that pool. I think I didn't mention what the target yield was for the launch pool. And there we did actually a 3-year study looking at all the airdrops over the last 3 years, and annualized it looks like kind of 8 to 14%, depending on if you sell them quickly or not. So 2% for native staking, 8 to 14% annualized for the launch pool, 8 or 9% annualized swap fees for the pancake swap. And then the final strategy we'd implement, and this is not always available, it's kind of opportunistic based on market conditions, but we can collateralize the BNB, borrow some stable coins against it, and then do very low risk DeFi strategies with the stable coins that, again, we're not taking directional risk because it's a stable coin. So all of these strategies are adding yield, but really not adding additional risk to the investor.
So to dumb that down, when you think about someone or an institution buying BNB directly on a crypto exchange versus investing in, let's say, a passive ETF once it gets approved or launched versus investing in BNB Plus, it seems like night and day, your potential.
Yeah, for a very sophisticated user that's comfortable doing these yield strategies that I mentioned, they could probably get something similar to what we're doing, but that's not the majority of people. We think it's the best way to kind of get safe exposure. You're not having to take smart contract risk and move money into a crypto exchange and hold it in a wallet and deal with all those things. And versus an ETF, currently there is no BNB ETF. We think some are coming, but typically the ETFs don't even do the staking, and you have to pay additional fees there. So we think that this is the most interesting way to get BNB exposure. And for US investors, which is kind of the most of our investor base, you still can't legally have a Binance account. You have to jump through a lot of offshore hoops and structuring and hire offshore directors and offshore traders and build a whole trading operation in the Caymans or BVI to access Binance. So that's not something most investors are going to do. So you can't access the launch pool yield on your own, which I think makes owning BNBX kind of the most interesting play if you want to get this exposure.
For sure. And then you built like a super impressive team. I mean, I think even people who aren't well versed in crypto would know Anthony Scaramucci, for example. Maybe talk about the team, how it came together, what everybody kind of brings to the table.
Sure. Yeah, I've known Anthony for almost 20 years. My background in the hedge fund industry, he was running a large fund of funds and was an investor in a couple of my clients, a couple of my funds. Have been going to his SALT conferences for 15 years. They've been a lot of fun. So Anthony was a guy who knew crypto well, knew TradFi well, and we were actually in a meeting with one of the largest hedge funds in the world, and they said, "We really like you guys. You're very smart crypto guys. You're smart DeFi guys, but none of you are famous. How are you going to get on TV?" And I immediately, the light bulb went off and said, let me call Anthony. Yeah. And I sent him a text. We're personal friends. And he was literally on an airplane back from speaking at a conference in Argentina. He texted me from the air and he said, let's chat when I land. And we negotiated a deal with him in 24 hours, and we're sponsors of the SALT conference, which I think are great. It's a very curated group of people that go to those. And Anthony's out promoting what we do and talking about BNB and BNBX. So I think it's going to be a great partnership. My immediate team is also super important and very talented. My two partners, Josh Kruger and JR Pash, that kind of co-founded the business with me. Josh is the chairman of the board. JR right now is an advisor. Josh and JR are both computer scientists by training. They came out of University of Texas, and these guys literally have been running crypto hedge funds since they were still in college. They were smart enough to discover Ethereum right after the ICO and literally link together a bunch of university computer labs at University of Texas and were mining Ethereum kind of on the university network. They wish they still had that Ethereum because it'd be worth billions of dollars today.
Oh my God.
They sold it for a lot less. And they've run 4 or 5 different crypto hedge funds. Were partners with me in my last fund, Coral Capital. So I've worked with them for 5 or 6 years. Both really high quality people and really smart developers that can kind of see around the corner of the crypto space. Have invested in hundreds of projects, been DeFi experts since the beginning. So that's who we have running the yield strategies. And I'm really impressed and excited to have them as partners. And then the operating team from our public company, we kept in place the CEO and the CFO, Clay and Beth. They're both superstars. And none of us have run a public company before, so we're really leaning on them around SEC filings. And it's just a different cadence when you're running a public company. You have to be super careful what you say, how you say things.
100%.
You don't want investor lawsuits. So having their experience, they've both been with BNB Plus for 10 plus years is awesome.
If Binance gets into the US, what impact do you think it has on the broader crypto space and like other exchanges? Would this be like a rising tide lifts all boats or like a zero-sum game? It just seems like we're still in such early innings of all this stuff.
I think it's going to be a positive for everyone. It may be less of a positive for the big US incumbent exchanges, Coinbase and Kraken.
Right.
You can go onto ChatGPT and ask it to do an analysis of Binance fees versus Coinbase and Kraken. And they're significantly lower, like maybe 75, 80% less. And you're getting better execution and deeper liquidity. So I just think it'll kind of right size the market. They're going to have to kind of get in line with Binance's fee structure if they want to keep the biggest traders. But I think it'd be a positive.
Yeah. So what's your take on the mood around all the DATs? You know, it was hot as a pistol, obviously, over the summer. Things have reversed a little bit, like anything that gets a little bit overfinanced. What's your take on it now? And I know that I know you're a strong believer in transparency in order to get existing and new investors comfortable. Maybe talk about the market and then talk about your approach to transparency.
Sure. So I think it was a really interesting trade. And like a lot of things, there was some market euphoria around it. Companies were going up 10x out of the gate, which really doesn't make sense and is not sustainable. But I think it was driven by a bunch of kind of pipe hedge funds investing in these things, some crypto investors investing as well. And people made some pretty good returns early on. There were a few structural mistakes by other people who I won't mention by name, but the market learned quickly how you had to do these things and was really evolving week by week and changing. We were pretty early. We started working on the idea in early June. We'd actually found a public company partner and announced the deal in July. And like a lot of these small public companies, sometimes they have issues. We knew this one had some issues, but we moved forward and we ended up having to switch to a different public company partner. So we ended up launching our deal closer to September. But we learned a lot. We dealt with a lot of bankers, met a lot of characters in the space, both on the crypto side and kind of the small cap world, which is an interesting group of characters to say the least. And I think it's really evolved from what was a trade and people were trying to make a quick buck and people were trying to get out of these and then do the next deal to where now need to look at these things as an investment. And do investors want to have exposure to this specific ecosystem? Is there a management team in place that can actually execute in terms of running the public company, running it very lean? If there's an operating business, are they able to structure that operating business so it's not a distraction from the DAT strategy? And most importantly, is it a token ecosystem where the management team can actually generate additional value? My argument for Bitcoin would be that it's a great ecosystem, but it doesn't make a lot of sense from a DAT standpoint because there's really not much management can do other than hope for token appreciation. So as an investor, I think it makes much more sense to own your Bitcoin directly or through a low-cost ETF. The Bitcoin DATs really were getting this additional premium from their growth. MicroStrategy and Michael Saylor did an amazing job growing that business very quickly for the last 4 or 5 years. But now I think we've seen that growth engine dissipate. Investors aren't willing to pay $2.50 for a dollar of Bitcoin anymore. So the edge from owning that stock, I think, is probably behind it. It's still fine, but it's just not as exciting from an investment standpoint. And I think the DATs that are going to do well are in token ecosystems like BNB, Ethereum, and Solana that are productive assets. I think it starts to get scary too outside of like the top, really even top 10 or 15 tokens because there's just not enough liquidity there. So there's been some deals done in these kind of deeper altcoins that I just think people are going to have a hard time getting out of and don't really make sense as public companies. Because as a public company, you need to grow, you need to be big enough. And these ecosystems, I just don't think can support it. So I think being in a productive asset, having a management team that can actually execute both on the public company and on the crypto DeFi side, generate additional value for investors. Because if the management team can't get you more tokens over time through their activities, what are you paying them for?
Yeah, totally. And then, well, the other thing that people would be paying you for personally as CIO is just your approach to risk. And I know you laid out all the different ways that investors can benefit from BNB Plus's strategy, but how do you kind of approach the risk of what you're doing while having this concentrated position in BNB?
So one of the first things that we kind of committed to investors was that we were not going to lever up our balance sheet. Pretty quickly into this DAT cycle, there was people doing a lot of convertibles. And we all know that crypto has a cycle and prices can go down dramatically, not always permanently, but temporarily over time. And if you've got kind of leverage on your balance sheet that's denominated in dollars and your assets are denominated in a token that's gone down, that can be a very bad situation. So we've committed to not levering up, not exposing our investors to essentially margin calls from convertible investors. And even in a down environment for us, since BNB is a productive asset, we can still generate yield. So even if token prices have dropped and there's not a lot of enthusiasm in the market to grow the business, we can still grow the business. We think at a kind of 9 to 12% annual cadence is our target. Over a couple yield cycle, we think that'll be kind of our average yield. And we'll buy more tokens and we'll build up the MNAV per share, even in a down cycle. And when the market's exuberant and we're able to raise capital multiple different ways, we'll do that. But the mandate, number one, is to preserve principal. I can't tell you if BNB is going to go up or down tomorrow, but we think generally over the next 3 to 5 years, BNB is going to appreciate. And we think there's a lot of positive things going for the ecosystem and for Binance generally. So we think it's a good place to be. We think being tied to what's essentially the largest and best business in crypto is a good place to be. It's a picks and shovels business. So even in a down market, Binance is still making money and burning the BNB and issuing us airdrops for new token launches. So we think that's a good ecosystem to align ourselves with.
That was Patrick Horsman. The company is BNB Plus, and it trades on NASDAQ under the symbol BNBX. The company was really built to take advantage of BNB's advantages versus other layer ones, namely the unique yield and compounding mechanism. Patrick and the team obviously have a lot of strategies to create value over time, and it'll be exciting to watch them execute on those strategies in the coming years. I'm Tom Ryan. We'll see you next time back in the arena.
References to specific stocks are not intended to be recommendations for specific trading behavior. Comments presented on this podcast are intended for informational and educational purposes only, and do not represent opinions or recommendations on whether to buy, sell, or hold shares of a particular stock. All investors are advised to conduct their own independent research into individual stocks before making a trading decision. In addition, investors are advised that past stock performance is no guarantee of future price performance.